Hello everyone, welcome back to this week's Technical Insights. Last Friday, US stock rallied across the board on dovish remarks from US Fed Chair Jerome Powell. His speech at the Jackson Hole Symposium solidified expectation that the central bank will cut its key policy rates in September. In his highly anticipated comments, Powell said that the time has come to lower the Fed funds target rate and the upside risk of inflation have diminished. The US Fed do not see or welcome further weakening in the labor market conditions. Powell added in his speech that appeared to all but guaranteed a rate cut at next month's policy meeting, which would be the first such cut in over 4 years. All three major US stock indices jumped after the release of Powell-prepared remarks, with mega-cap stocks like Nvidia and Tesla jumping more than 4% each. All three indices also logged weekly advances, standing on the shoulder of last week's largest year-to-date gain in an intense comeback. For the week, the Dow Jones Index advanced an impressive 515 points, or 1.27%, to 41,175 points, just about 200 points away from the all-time high that we saw in 15th of July this year. Broad Index S&P 500 was the best performer among the three US indices last week, adding 80 points, or 1.45%, to close at 5,634 points, now within striking distance of its all-time high of 5,669 points by just 35 points. Tech-heavy Nasdaq Composite Index also jumped 246 points, or 1.4%, for a second consecutive week to 17,877 points. Jay Powell further said that the direction of travel is very clear, and the timing and pace of the rate cuts will depend on incoming data and the evolving outlook and the balance of risk. That pleased traders who are unanimous in betting a rate cut at September meeting, according to the Fed Fund futures pricing, but there is less consensus over how big that decrease will be. Small cap stocks also gained on this outlook, with the Russell 2000 advancing more than 3%. In Asia, Hong Kong Hang Seng Index recorded a third consecutive weekly gain despite a slight fall on Friday, dragged down by Chinese blue chip disappointing earnings. The Hang Seng Index fell 0.16% on Friday, or 29 points, to 17,612 points, ending the week with a 1.04% gain. The Hang Seng Tech Index retreated 1.13% on Friday, or 40 points, to 3,468 points, but managed a positive week with a 2.5% jump. Gaming firm NetEase slumped more than 10% to Hong Kong dollars $128.30, the biggest losers among the HSI index components, after its second quarter result missed consensus. Shipping giant Orient Overseas International tumbled 7.3% to Hong Kong dollars $106.40 after its interim earnings slumped 26% year-on-year. Tech stocks were generally weaker, with Chinese internet giant Baidu shedding 4.9% to Hong Kong dollars $82.20 after reporting a flat second quarter revenue. Xiaomi dropped 1.5% to Hong Kong dollars $18.82, and food delivery platform Meituan lost 1.4% to 107 Hong Kong dollars 50. Alibaba Group Holdings rose 1.2% to Hong Kong dollars $82.65 after it announced it will convert into a dual primary listing status on the Hong Kong Stock Exchange, opening the door to mainland Chinese investment. In Singapore, our STI index gained 4.3% on Friday, or 14 points, to 3,387 points. For the week, our benchmark index is up 35 points, or 1.05%, to record a second consecutive week after the big 2.79% gain last week. We have recovered most of the decline we saw in early August, and is now about 3.7% away from the year-to-date high that we saw on 15th of July at 3,509 points. Data from the Department of Statistics on Friday showed that Singapore core inflation is more than expected in July, while headline inflation maintained pace. Core inflation, which excludes accommodation and private transport, was at 2.5%. This was lower than the 2.9% recorded in June, as well as below economists' estimate of 2.9%. July headline inflation was 2.4%, the same rate as in June, just a tick lower than the median forecast of 2.5% by market estimates. Official inflation forecasts remain unchanged after MAS lowered its headline inflation forecast range at the latest policy meeting in July. So the cooling core inflation rate is a positive development and suggests that MAS may have more flexibility in its monetary policy in bringing down the elevated interest rate that we are seeing right now. The biggest winner on the STI index last Friday was SATS, rising 2% or 7 cents to $3.57. HiBev also led the gains up 1% or half a cent to 50.5 cents. So for this week's analysis, let's look at airport services and food solution provider SATS. Singapore Airport Terminal Services, or SATS in short, provide comprehensive scope of airport services encompassing air freight handling, passenger services, and food solution. Last Friday, the share price rose 7 cents or 2% to $3.57. For the week, the share price rose a massive 12.62% after an 11.49% gain last Wednesday. The company announced last Tuesday that it booked a net profit attributed to owners of Singapore dollars 65 million in the first fiscal quarter, compared with an attributable loss of 29.9 million in the year-ago period. This came as revenue for the period rose up 1.4 billion or 15.5% from the 1.2 billion it posted a year earlier. The growth in revenue was attributed to both its gateway services and food solution business. Revenue for its gateway services segment grew 12% year-on-year to 1.1 billion on an increase in air cargo volume from high-tech shipment and the shift from ocean freight due to crisis in the Red Sea. Meanwhile, food solution segment grew 29.3% to 310 million as in-flight meal demand also rose. On the chart, we can see that SATS share price has been in a consolidation or range-bound formation since 2023. After acquiring WFS in 2023, SATS restructured its gateway services business, and those investments explain the drop in SATS share price in 2022 and the consolidation in 2023 as well. SATS is now reaping its reward of WFS acquisition and aims for a supersized 8 billion revenue by the year 2028, said its CEO a few months back. This year, SATS share price managed to break through a range-bound pattern with a low at $2.40 level and the high around the previous year-to-date high at the $3 level. In July this year, the share price touched a new high of $3.35 on the 15th of July, after forming a higher low at $2.79 in the June period. This range resulted in a more than 20% gain, and the year-to-date gains now stand at about 30%. After hitting the high of $3.35 in July, SATS share price actually retraced back to the previous year-to-date low over here of the $3 level that we found in June, which had a change in polarity now from a resistance level to become a new support level for SATS share price. This level also coincides with the blue line, which is the 50 days moving average, which further provides support for SATS share price to hit a new year-to-date high last Wednesday at $3.60. Looking at a big jump on Wednesday, it was supported by huge volume as well. Hence, the current share price is likely to be sustained. The MACD indicator has also shown that in the last 3 trading sessions, it had 3 positive readings, and we also observed a crossover of the MACD line above the signal line, indicating that the stock is in an uptrend and the uptrend is likely to persist. The RSI reading is now at 68, signal that the share price has a very strong and healthy uptrend momentum, even though it did breach the 70-point mark last Wednesday to a high of 72 points. So overall, I believe SATS share price is likely to continue its uptrend, and investors looking at SATS can consider the 20 days moving average, which is the line in green, as well as the 50 days moving average, the line in blue, currently at the $3.20 and $3.10 level, to accumulate further towards the year-to-date high again at $3.60. And these are the updates that I have for you this week on the markets. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.